All right, good morning, guys, and happy Monday. This is Taylor getting things kicked off for Monday the 12th. Let's do a quick sound check on YouTube and the free room. Hey, Lee, Lorna, Mirza. All right. Yeah, hope you guys had a good weekend. We are back to the grind. So, guys, let's talk bigger picture, and then we'll talk short term. So, short term could be the next week to 2 weeks, and then, of course, bigger picture. We're kind of thinking out to October, November, December. So bigger picture, I think this could be setting up here to, pretty much give us a really big bull trap. All right, so bigger picture, I think eventually we're going to roll over, take out recent support, and eventually I think we take out those lows. Shorter term, however, I think the bulls have maybe got a little bit more room here to the upside. So get rid of the drawing set. So the futures were popping up a little bit here this morning, but on the cash product, the SPY. So kind of one of those things where let's hold, two ideas at once. Where I think in the short term, let's be prepared to play this market to the upside. But I do think at the same time, any push towards 415, 420, I think we want to short into that for November, December expiration. But for the shorter term here, pretty good progress last week. And actually, before we even look at the S&Ps, let's look at a few things here that can kind of serve as additional gauges of the next move. So for the dollar, the dirty Dixie, it's getting a little bit interesting here. So of course, guys, the correlation is strength in the dollar, weakness in the S&Ps and the QQQ. So you can even see that correlation over the last 3 or so days here. Little dip in the dollar and a pretty good pop there in the market. So the dollar is pretty interesting where structurally it's still pretty bullish. We got the daily buy signal on the big 3 indicator. It does break the 21 EMA this morning, but then you got your 50 SMA down here as support. So it's going to be interesting. In the event the dollar really breaks down, like you're getting a big flush under your 50, then I think you see the S&Ps and the Qs actually trade much higher in the short term, right? Suppose the dollar kind of comes back to life, you're back above that 108.50, back above your 21 EMA. Any strength here is going to push the market back down. So I wouldn't say that the dollar has completely checked out just yet, but I do think we got a bit more of a rally to play to the upside if that can break the 50. So it's an interesting spot. And then for the junk bonds, HYG, we'll see where this opens up today. But the correlation here is strength in HYG, strength in the S&Ps and the QQQ. So, of course, last week you get the pop there in your junk bonds and you get the pop in the market. So kind of like the dollar pulling back is progress for the bulls, and the HYG popping is also progress for the bulls. Doesn't quite fix all the problems just yet. If we can cancel out that daily sell signal, and you actually get HYG closing above that daily 21, or better yet for the bulls, back above the 50, you probably got some more upside in the market. So, use those two things here this week. If you're super bearish, you're looking for the market to roll over, today, tomorrow, Wednesday. Well, ideally for you, you want to see HYG roll right back over. And then you'd, of course, want to see the dollar get popping back towards the upside. If you're bullish this week, you want to see the opposite. Dollar coming on down to earth and the HYG, again, ideally getting back above that 50. So let's not lose sight of those two things. But as far as the market goes, you do get your close on Friday back above the 50. So, of course, that's a pretty important spot. And you do get the close back above the daily 21. So it's it's decent progress on the daily chart. The real progress here, guys, is going to be on your lower time frames. So the hourly chart, for example, and let me grab the the moving average bars here. There we go. So from the bulls perspective, a lot of progress under the surface last week. Your 5-minute, 15-minute, your 30-minute, your hourly charts, they got the positive moving average cross, meaning the 21 EMA is back above the 50. And that kind of opens up the door here, guys, for a little bit of trend, meaning we could continue to grind to the upside. Now, the biggest thing I think you want to be mindful of this morning, and this tends to be the case, right? The market makes a huge flush. Eventually, we trap the shorts. So then you get the short squeeze, but those short squeezes, they're pretty nasty, right? They unfold pretty quick. So next thing you know, the S&Ps are a good 2 to 3 plus ATR above your hourly 21. So in other words, expect the dip. Right? Always expect that back test. And that's basically where the market gets to prove itself. So if we can find a few examples, let me see. All right, so if you're bullish, maybe you're a little bit patient here. You wait for the dip, but this is what you're looking for if you're bullish. Back above the hourly 50, back above the hourly 21. You get that positive moving average cross. Then you get your first dip. Notice how everything holds. 21 EMA stays above the 50. At that point, you got the big 3 buy signal. Everything holds up. That's when you can buy that dip and look for continuation. Say instead we get the old trap the shorts, squeeze the shorts, but then on the first back test, everything falls apart. Well, then there's a pretty good chance. We probably don't want to be long anything, and we could head back down pretty quick. So to me, that's kind of the game plan. Enough progress here under the surface. And I would say enough quote unquote progress to your daily chart for me to think the bulls could take this a little bit higher. And ideally, guys, I do want to see the market trade a little bit higher because then we're going to get October, November, December call credit spreads, put debit spreads, with such a good risk versus reward. But before I can make that decision to try to play this to the upside, gotta wait for that first back test. And I think the same can be said for a lot of things. As far as a few spots I would like to get long, and again, this is all really short term. So I'm not looking to get long the S&Ps or Tesla really for, 5, 6, 7 weeks. All short term thinking. But if you look at Tesla on the hourly chart, kind of the same. Trap the shorts, squeeze the shorts. It makes for a pretty good rip. But now you're a good, we open up at 301, 302. You're 3 to 4 average true range of moves above that hourly 21. So you got to expect at some point the back test. If the back test does this, you finally get the dip and we break down, you lose your buy signals, you get the negative moving average cross. You probably want to be a bit careful getting long Tesla. If the dip does something like this, everything's intact. Could be a few shots here, guys, to the upside. So short term versus big picture. In the short term, I think the bulls might have enough progress here to take my market a little bit higher. And I would welcome that. I think we should be able to make some nice money on the upside. And then I think we can parlay those profits into the shorts. And the last thing I wanted to show you here as far as the short side, this most recent flush made some progress in terms of the market becoming an easy short, but we're not there just yet. So my thinking is for the S&Ps and the QQQ, my plan is to be heavily short, 10% position size on some November, December puts. If we can get the combination of big 3 sell signals, which the Qs actually have, that probably gets canceled in the short term. But we're looking for the combination of the red arrows, big 3 sell signal, and the negative moving average cross. So I want to see these candles go from blue to gray. If you can get that combo, big 3 sell signal, that tells you the 10x bars, the stacked EMAs, everything's already lining up for the path of least resistance to be to the downside. but then you get your 21 EMA breaking under your 50, it becomes a much easier short. So we didn't quite get there this time around, but we got pretty close. 21 EMA kind of pulls down into the 50 with the QQQ. And on the S&Ps here, things are getting closer. So, I could be dead wrong. And if we get to the point where it looks like I'm dead wrong, as always, got to make adjustments to the game plan. But for now, the current thinking is, guys, this is kind of, I think, one more rip before everything. Because I've got to imagine if we trade a little bit higher and then flush, next time we flush, we should get that combination. The 21 EMA should end up under the 50. And at that point, we should have a bunch of sell signals. So it becomes an easier short. So that's how I see it for now. So far as potentially playing a few things to the upside, let me grab, let's do this. And nope, that's not it. All right, and then I'm going to grab the bars here. Only a couple of names I'm going to focus on. Really, S&P's QQQ, Tesla, and ExxonMobil. So we shall dive in here. Start off with Tesla, or do we start off with ExxonMobil? We'll do Tesla first. So for Tesla here, definitely a little bit of leadership right now. Compare the chart of Tesla to the chart of S&P's QQQ, the semiconductors, NVIDIA, Google, Apple, Microsoft, even Amazon. Tesla looks a lot better. I don't think Tesla rallies if the market falls apart. So this all kind of goes back to the idea of the market in the short term has got a little bit more room to the upside. And if that is the case, I think Tesla probably has got a pretty good shot here at a nice move. So as far as the trade idea, we're back above that 21. And then you guys will notice over here on the hourly chart, some really good progress last week with that positive cross. 21 back above the 50. Of course, we're a little bit overbought. What's that? Probably 3 to 4 ATR above the hourly 21. So in other words, I'm not going to chase it. And if Tesla goes from here all the way up to 310, I'm just not going to catch a move. So what I would like to see ideally, and I'm looking for this in the S&Ps as well, let's get the first back test. And assuming that all holds up as support, then I'm looking to get bullish on Tesla for a push towards 315, 320. So pretty straightforward. Decent daily structure. Pretty good hold of the 50. 2 closes back above the daily 21, positive cross on the hourly. It all kind of sets the stage for push to the upside. So pretty much I look for Tesla to prove itself. A little bit of a flush. If it all holds up, you look to buy that dip. So probably something like a 295 put credit spread. Couple weeks to expiration. Something like that probably makes sense. Got to hold the dip, though. And then pretty much the same idea here, guys, for ExxonMobil. So energy is going to be interesting. Closes Friday back above the daily 21. But to me, more importantly, you get that positive cross on the hourly. So the whole idea of watching XLE or Tesla or ExxonMobil at the daily 21 EMA is to try to catch a huge push like that. That's what we're looking for, guys. Get long 3, 4, maybe 5 days later. Cash out on that big push towards +2 to +3. So what I'm learning more and more is your daily squeeze, your daily trend. That all kind of sets the stage. So a daily squeeze in an uptrend, yeah, chances are it probably fires to the upside. The stage is set. In terms of what actually triggers that move, I'm learning more and more. It's all about your lower time frames. So the thing to study, and the thing I've been studying like every night for the last few weeks, is I know what the daily chart looks like. That's all really straightforward. You got a daily squeeze above your 21 EMA. The thing I've been studying is, okay, on that push, right, before and during that huge push, what's going on the 15-minute chart? What's up with the 30-minute chart? What's up with the hourly chart? And the thing I'm learning is, at a minimum, you want that positive cross. Like, I haven't found a single example, and you won't find an example of a time where a stock goes from the daily 21 EMA towards +2 to +3, and you've got that negative cross on the hourly chart. So, for example, do we buy ExxonMobil back here just because we pulled back to the 21 EMA? The thing to check is your hourly chart. And we'll pull the hourly up over here. Negative cross, no buy signals. No, you don't buy it at the daily 21. As soon as you get that positive cross, now there's a chance it turns into a little bit of this. So for XLE, it's starting to wake up here, and for ExxonMobil, kind of the same dynamic. Pulls back to the 21. The hourly chart gets a little bit iffy, but there's your positive cross on Friday. So now the idea is get a little bit of a dip, and if that dip holds support, we're looking for a push towards about $100. Study that move, though. Not so much your 15-minute, your hourly. You're going to notice a lot of like common characteristics. What triggers that push off of the daily 21 EMA is a really bullish 15-minute, 30-minute, 1 hour, etc. So a little bit early here, but I like being early. So we got ExxonMobil on the board. We've got Tesla on the board. And realistically, guys, the easy trade would be to try to get a little dip here in the QQQ, maybe back towards your hourly 21. And with the positive cross here, assuming that holds up, you could look for a bit more upside on the QQQ. It's all the bases. That's about it, though. A little bit of Exxon, a little bit of Tesla, and we got a position from Friday in EMPH. Let's see, where are we going to open up today? Could you guys look for an entry in EMPH, 306-ish? I think this gets back towards that 21, 292, 291. It might be good for an entry. We got some call debit spreads on Friday. So really nice uptrend. It also happens to be the most heavily weighted stock in a pretty good looking sector. So TAN is the solar EF. Pretty good daily squeeze over there. So for EMPH, kind of checks all the boxes. Yeah, it checks all the boxes, actually. Good looking daily uptrend. You got the daily squeeze. We've got big 3 buy signals on the daily 4 hour, 2 hour, and the 1 hour. All looks pretty good to me. So we got the exit on the close back under the daily 21. And we're looking for a push here towards 330, 340-ish. All right, but the key, of course, is that all sounds good on paper. Like, yeah, nice chart. We got a squeeze. We got some pretty colors on the indicator. We'll close the trade under the 21. We'll take profits at 335. Certainly sounds good on paper. Make sure you guys are getting in the habit of looking at these trades in the Analyze tab. Oftentimes, the trade might make sense on paper. Yeah, good entry, good exit. Depending on the options trade you take, depending on a lot of things, strike selection, time till expiration, the trade might sound like a good idea, but lo and behold, between your two targets, might be a little bit iffy. So for example, the trades that I got on EMPH, say by Friday we're pushing back under, was it 290? Yeah, so come Friday we're pushing towards 290. I got to take the exit. I'm down about $2,000. If we can catch a push towards 335, 340, I'm up about $4,000. It's really all I can ask for. What I think is a high probability setup. But if I'm wrong, I lose about 1. And if I'm right, I make about 2. Can't ask for much more than that. So solar's pretty solid as well. The issue here, if you want to call it an issue, again, a lot of them look pretty good, but they're a little bit overbought. So First Solar is a beast, but little extended. SPWR is a beast. That's a bit extended. You got Solar Edge. Kind of a laggard here. We like EMPH. We've got that, and we got an October expiration call credit spread on the SPX. So that kind of puts me in an ideal position. Here's the way I look at that. And it's a lot easier to have this mindset if you have a call credit spread versus, out the money puts or something like that. So we've got this call credit spread on the SPX. Our short calls are up there at 4,100, and that expires at like the end of October. Though I think in the short term that trade goes against me, kind of puts me in an ideal position. So based on my position size, if we close under 4,100, I think it's like October 21st. On my position size, that trade brings in, I think, $5,000 or $6,000 of profit. So the way I kind of look at it here in the short term, it's like, hey, bring it on. I would love to see the market rally for a week or 2 weeks. Because guess what? If the market limits down 5% and just totally falls apart, awesome. I got some nice profits coming in on that short position. So in the short term, it kind of serves as a bit of a hedge. I can look for that entry in ExxonMobil. I can hold that trade in EMPH. I can look for an entry in Tesla. And guess what? If I can actually hit on those trades, pretty quickly my short position it'll pay for itself. EMPH, Tesla, ExxonMobil, etc. You make enough in the short term on those bullish ideas to totally cover the risk on your short and move the ball forward. I fully welcome that because I think eventually we're going to roll over in a really big fashion. Or I buy the dip in Tesla, I buy the dip in ExxonMobil, and we wake up on Thursday, Friday morning, and it's just game over for the market. Huge gap down, never to be seen again. Yeah, I'm probably going to take a paper cut on Tesla, ExxonMobil, etc. But I've got that short basically covering any of that risk. A pretty good balance in the short term. So for those of you in the gold room and those of you in the mastery, if you have that call credit spread with me, that's my current thinking. I'm not personally looking to take the trade off. And I kind of look at the market and say, let's dance. Bring it on, big fella. You roll over and die, I'm in good shape. So you want to tango for a couple of weeks, then let's get to tangoing. But that is the game plan, guys. Wait for a bit of a dip, and then I'll take it from there. And I'm not going to marry either one of those ideas. So I'm not going to marry the idea that the market's eventually going to roll over in a huge fashion, but nor am I going to marry the idea that in the short term, we could actually trade a little bit higher. So for me, it's kind of as simple as let's wait for a dip, and then depending on how that dip behaves, we'll kind of take it from there. We pull back to 403, we find support, turn the corner, trade higher. Okay, give me some Tesla, give me some ExxonMobil. We roll over and die. Time for the short to do its thing. So that's how I'm seeing it, guys. It won't be a dull few weeks. Couple more things to keep in mind. We got a Fed meeting, I believe, next Wednesday. First Fed meeting in a while. And then this Friday is, I believe, witching expiration. Always room for shenanigans during witching expiration. That's what I got, my friends. I got about 5 or so minutes here before I got to jump into the options room. I got to do an extra 30 minutes in the options room today. Old Sam's on vacation, doing that double time. Agent 86. I would look to get long Tesla in the short term, a week, maybe 2 weeks to expiration. Assuming the next dip towards the hourly 21 EMA for both Tesla and the S&Ps holds up and finds support. Then I think about trying to take a little push towards 310, 315. Basically, I want to avoid getting long in the bull trap, because we've seen that dynamic over and over again. Huge flush, trap the shorts, squeeze the shorts, huge rip, trap the bulls, squeeze the bulls. So it's kind of like, okay, and hey, maybe I missed the entire push. Right? That's very likely as well. Maybe Tesla never pulls back. But I think to eliminate the risk of buying into a bull trap, can I get a dip towards 295-ish? Kind of gives Tesla and the market a chance to prove itself. Gives the bulls a chance to prove themselves, so to say. Yeah, Dewan, so in terms of, there's a few different ways you can go around it in terms of, okay, I got a short position here. What can I do in the short term to work around that? For the trade that we have in the S&Ps, the 4100 call credit spread, you certainly could look to just short the 4100 puts. And I don't mind that idea, Duan. The more I thought about it over the weekend, there's a lot of different ways you can go about it. Really, the goal is let's just make up that risk. So say there's $2,000 of risk on the SPX short. And my mindset is, hey, if we're going to rally for 2 weeks here, let me do my thing and make more than $2,000, cover that risk, move the ball forward, and then in a perfect world, the home run would be we make money to the upside, take those profits, put them into new short positions, then we catch the big flush. It's like best case scenario. So in terms of how do you go about that, if you got a call credit spread shorting the puts on the opposite side of the same strike, certainly one way to go about it. And it does make a lot of sense. You could also just say, hey, I'm just trying to make some money here. There's a great setup in Tesla. There's a great setup in an ExxonMobil or an Enphase. And really, at the end of the day, it's all kind of the same thing. Meaning if the 4100 put credit spread on the S&Ps worked, then the 295 300 put credit spread on Tesla probably works as well. Pretty good chance the 95 calls on Exxon works as well. So good question. Few different ways we can skin that cat. ANF, thank you. I appreciate that. Good morning, Tony. All right, guys, we're here to YouTube. See if you've got any questions over there. Hey, guys, good morning, Terry. Eli, what you got here? Eli wants to take a look at keys. Great looking daily chart. Buy signals on the daily chart. Positive cross last week on the hourly buy signals. It is all pretty snazzy. And a beautiful 30-minute chart with a squeeze and a buy signal. So guys, my favorite setup in the world. Regardless of the time frame, squeeze plus a buy signal, that's my favorite. This looks awesome as far as shaping up for a push towards, probably back towards those recent highs. The question, of course, anytime we're getting towards that 2 ATR Keltner channel extension, the question always becomes, before we make that push towards 181, do we pull back a little bit first? Kind of like back here. I made a huge push. Now, of course, not to the same extreme, but just kind of the thought process. Yeah, this could go to 190 eventually, but you are going to get those dips along the way. So I love this setup. For me, the perfect entry is basically back there right on top of that daily 21. Because now you're in a position where a little bit more upside, you can cash out with a great profit. So pretty much it's a great setup. I think you want to trade it in a fashion where if it has to pull back to 168 first, I think you want to make sure you can comfortably sit through that. Because it is a pretty setup, really pretty setup. Yeah, PANW is pretty clean as well. I think Sam was looking at that last week. I mean, a lot of things in the market are in the same position. Really big push last week. And now that big push kind of leaves us, pretty overbought here on the lower time frames. So it's not that I don't think Palo Alto can trade higher from here. It's just more so in the short term, not always sustainable. Got to get some sort of back test. But if you can get a dip here and everything kind of holds up, I think it makes for a good buying opportunity. Hourly buy signal, positive cross. It's all shaping up there. All shaping up. Sebastian, CVX. Yeah, Sebastian, kind of the same dynamic here as ExxonMobil. It's a little bit dicey back here, but then you get the official close back above the 21, and you get that positive cross on the hourly. A little bit overbought here, but if that dip can hold support, then it can all turn into a little bit of that action. A lot of things shaping up here, guys. But all right, my friends, I got to cut you loose here. Got to be in the gold room in a couple of minutes. But for those of you who are interested, check out the Simpler website. If you haven't signed up for the free room yet, definitely check that out. I'll be in the free room today from 2 to 3 p.m. Eastern. Nice hour-long session. So check that out, guys. But until Wednesday, wish you all the best of luck. Hope you found this helpful, and I'll talk to you guys soon.